Kia ora, and welcome to the Cotality Property Market Update for Paenga Whawha, April 2026. March's Home Value Index shows property values across Aotearoa grew by a further 0.2% over the month, following a similar lift in February. This takes the national median value to approximately $803,000. This small lift likely illustrates the momentum we saw in the first few months of the year, with buyers already in the process continuing their purchases, despite the global disruptions currently hammering consumer and business confidence. However, the conflict in Iran has led to a spike in inflation and a reduction in economic growth expectations that will likely go beyond the short term. Because the market had only just begun a tentative recovery, it won't take much to knock it back, and that's exactly what we now expect. When you consider that home values are still 1.3% lower than a year ago, and 17% below the post-pandemic peak, this new uncertainty starts to resonate much more strongly. Across the main centres, the first quarter summary offers useful insight into the split between islands. Ōtautahi Christchurch and Ōtepoti Dunedin experienced 1.1% and 1.7% increases in value from January to March. Meanwhile, Kirikiriroa Hamilton was the best performing main centre in Te Ika Maui, the North Island, growing by 0.6% over the quarter. Tauranga and Te Whanganui Atara, Wellington, were essentially flat, while Tamaki Makaurau, Auckland, saw a minor decline of 0.2%. Despite a quiet January, first home buyers finished the quarter strong, picking up 27.5% of sales in total across the 3 months. With supply and demand still tilted in the buyer's favour, new entrants are making the most of that power. Alongside a still expensive rental market in many places, assistance from KiwiSaver for deposits, and an accommodative speed limit on loan-to-value ratio restrictions, used mostly by first-home buyers, they show no signs of slowing down. The finances are much easier to justify for a first home with a long-term horizon, but for those moving between homes, activity remains subdued. Only 25.8% of sales went to relocating owner-occupiers in Q1. With economic and job prospects looking shaky, many movers are likely to remain on the sidelines until the outlook improves. We are also seeing caution return to the investor space. While some mortgage multiple property owners are making the market work, we saw a minor dip in their activity in Q1 to 23.6%. The broader trend is still up from the lows we saw a few years ago, but the environment has changed. The interest rate trough is now behind us, and with rent soft and operating costs up, investor caution is set to return, especially as political uncertainty re-emerges in an election year. Borrower behaviour has already recognised this turnaround in rates. The latest lending data from the Reserve Bank shows a major switch towards certainty. Only 19% of new mortgage lending is now floating, down from a peak of 39% in November 2025. Instead, the majority, 53%, is now fixed for 18 months or longer. The 2-year term has become the most popular choice once again, favoured for 31% of all new lending in February. This matches the tone from the Reserve Bank, which held the OCR at 2.25% in its April review. While the decision was unanimous, the Governor's acknowledgement of second-round inflation was a warning. Reading between the lines, the bank's willingness to act decisively suggests the balance of probability has tipped toward an earlier rate hike, potentially as soon as September. Finally, in the new build sector, building consents have been surprisingly robust, rising above 37,500, the most in over 2 years. However, construction cost growth is re-accelerating, with a 1% lift this quarter. With rising fuel costs likely to flow through to building materials, that demand for new builds may soon take a hit. In short, while the market started the year in a positive state, all bets are off while we await a resolution to the conflict in Iran and the subsequent choking of the Strait of Hormuz. Stay up to date and download our latest reports at cotality.com/NZ. Follow Cotality NZ on social and subscribe to the New Zealand Property Market Podcast on your preferred platform. Mā te wā.